We'll do our best to answer as many questions as we can. And team, if there's something you don't want to answer, I will take that one in the chest for you, all right? So, Mark, Simon. Mark, you have the honour. You go first.
Okay. First Mark, second Mark. So my name is Mark Taylor. I'm the CEO for Equiniti Financial Services. Equiniti is a specialist outsourcing business. We floated on the market last year, and we provide services for registrars, business process outsourcing. And in my side of the business, in my division, we are the regulated arm. So we are the piece that owns Self-Trade, who is here today, providing retail broking services. And we also provide areas such as international payments, foreign exchange, and custody clearing and services for the overall retail broking market. Thank you.
Mark.
I'm Mark Fahy. I head UK small and mid caps at the London Stock Exchange. Clearly that covers both AIM and the main market from our perspective. I spend my days working alongside private companies quite often who are considering whether an IPO might be a route for them to take. And also we run something called the Elite Programme, which is designed to support ambitious scaling businesses as they look to take their steps and grow their business over time. I also have a geographical split as well, so as my accent might give away, I do things more in the north than in the south, but don't hold it against me.
Simon.
I'm Simon from Cenkos. I'm head of research for the growth companies team, and our role is to raise capital for growth businesses. I've covered the technology sector since 1999, which was a baptism by fire as an introduction, and I've covered the sector both as a buy-side and sell-side analyst.
Perfect. Now, we have a lady with a microphone here, so if you don't ask us a question, we're going to sit and talk about our summer holidays. So please, this is your chance for the next 25 minutes to find out something that's really of importance to you. So who'd like to ask the first question, please? Gentlemen here, please. Thank you very much indeed.
Yeah, with all the problems with data security, i.e. talk, I mean, do you see the potential for new companies to be getting involved in data security?
Yes, absolutely. There are a number of nascent businesses in the financial services, but also other specialist markets that are catering products for those verticals. And it's a very competitive space, and it should be, because there is a huge demand for secure data transfer. And we're constantly aware of lots of data breaches, and they're still happening, Talk being a high-profile latest example. And until the problem is solved, it's going to recur. And that's why there's a lot of capital going into that part of the market.
Mark?
Yeah, and if you look at the growth of NCC Group, who've gone from kind of AIM to the main market and keep going ever upwards. They're obviously part of that space, that sector, and they're benefiting from the trends which are emerging in this space, as Simon has already relayed.
I mean, Mark, obviously you're at the sharp end of this in many ways, given what your company does.
So we are responsible for a significant amount of data, both in the government sector and the private sector. I think the really interesting stories that we're seeing, because we're a user of technology as well and deploying that technology, are some of the peripherals that we're looking at. So, for example, we're starting to experiment now with visual recognition technology, which you'll see used on your passports now as you go in and out of the UK. We think that is going to be a very important technology in terms of proving who you are and what you are at that point in time. And therefore, I think probably within the next 12 to 18 months, certainly in the securities processing space, you'll be seeing visual recognition coming in to secure your data, and we will be deploying that. There are also some other very interesting areas that we'll be seeing that deployed, and we do a lot of administration in the pensions arena. And one of the bigger problems, not just in the UK but across Europe, is proving that people are alive, which is an increasing problem for the governments because they're paying out on benefits. So I think it's going to be some of the peripheral technologies that you see deployed, which will prove whether or not these people really are alive, because they'll have to sign on using visual technology.
Perfect. Thank you very much. Next question, please. Lady at the back there, please. Thank you very much. It's just on its way. Thank you.
Have you noticed that the withdrawal of banks from term lending has influenced companies in accessing the equity markets more often for follow-on offerings or initial offerings?
Pipeline question. You may all have to be shot later, or at least locked in this room potentially.
I think, interestingly enough, if you look at the AIM market for last year, for example, so we raised £4 billion last year on AIM, but only about £500 million of that was for IPOs coming to the market. It was existing AIM companies coming back to raise more money to grow, to conduct M&A. And I think the thing that we can see from where we sit is there's no shortage of capital out there. There's plenty of bank debt as well, but the issue is who the company is who wants to do the lending is often the challenge. And we're also seeing alongside that the growth of alternative finance sources as well. So peer-to-peer lending, for example, staggering amounts of money raised in that space in the last 18 months, 2 years. And again, that's informed part of our pipeline. So we've already seen 4 or 5 peer-to-peer lending funds come to market, and we expect to see more of that moving forward.
Gentlemen, anything to add on
Yeah,
pipelines or funding?
Interestingly, in my bio, you'll see I sit as a NED on a social investment platform. And it's fascinating because if you look at the sort of carrot and the sticks that have been involved in trying to encourage more investment in some of these up-and-coming companies, we specialise in for abundance on social technologies, so alternative areas of investment for solar power, etc. They are the only areas of the market you can go to raise cash. The banks have actually drawn up the bridges. They don't want to necessarily take the risks anymore. And I think, as the speaker beforehand was saying, the run-in to return on some of those investments is much longer than many people expected. And particularly in the alternative energy sector, you're sort of looking at 20, 25 years for some of those returns to come through. It's a long time. But what we do notice is that the attachment, the connectivity that many of those investors have is not just purely financially driven. They want to be connected with areas that are actually doing some good around investment and seeing that money put to good use, rather than just purely looking at it from the point of view of a quick return.
Yeah, I'll add probably that I wouldn't underestimate how much innovation goes on within banks themselves to invest in new technologies. And so, whilst lending is a very discrete area from equity investment, the banks actually do straddle both.
And yes, please, sir. Thank you ever so much.
I'd like to ask a question about private investor participation in secondary fundraisings. The vast majority of companies still do a secondary fundraising just as an institutional placing. So the private investor who may well have been a shareholder in the company for a long time, first he knows about it, it's on the screen, it's a done deal, often at a large discount, and he has no opportunity to participate. Is there not, and I'm sort of addressing the stock exchange gentleman as much as anybody else on this one, is there not the opportunity in this day and age of electronic dealing that existing shareholders in a company should be offered the opportunity to take place in discounted share placings?
Agreed, I couldn't agree more. I mean, the issue we face often is we're very keen as a business to democratise share ownership, so that's really important to us as a business, and the regulation often is the thing that hinders that, particularly around the prospectus directive. Now, the good news is that's being looked at right now. There's a consultation ongoing which might increase the exemption limits on the prospectus directive to try and enable that to happen a bit more. Also, it's been interesting in the last couple of years, we've seen far more offers, public offers in the IPOs, admittedly the larger end, to retail investors and also intermediaries offers as well. So it feels to me like things are changing. It might feel quite slow from your perspective, and I hear this frustration, as you might imagine, quite often. But from our side, we're working very hard to try and find ways to kind of help that happen through our lobbying, our work at both the government and the EU level to try and to give every shareholder the same access where we can. But often it's a regulatory issue in the near term.
I'll just say at Cenkos we had more than a couple of transactions last year which had open offer elements where the public could participate. So it does happen.
And on the sort of back office side, or anything you'd like to add with your Equiniti hat on, Mark?
I'll put my brokerage hat on this time around because, we're really very supportive of seeing the retail public getting access to those secondary markets. We are as vocal as we can be in the marketplace on their behalf. I think it's very important because they are a good source of equity raising for these companies, and the companies should actually show their loyalty towards those investors. I don't think necessarily the investment bankers, and I'll get into trouble probably for saying this, but the investment bankers do not necessarily like retail investors. They don't understand them. And I've seen that in many IPOs that we've been involved with in the last 12 months I look at the pipeline of IPOs coming down the line over the next month to 2 months. There's about 15 that I'm aware of at the moment. And the number that don't necessarily get a retail presence is poor. So I think there's a big message to be delivering out to the investment banks that underwrite these issues going forward, that the retail investor has a very significant part to play. They're loyal to those companies, they invest in those companies for the longer term, and they're not likely to flip them in the short term, which causes problems. So I really am very supportive, and we will continue to lobby on behalf of the retail investors to get that through.
Is there a timeline for that consultation, Mark? Would you know off the top of your head? I don't mean to
Prospectus
put you on the
directive,
spot,
yeah.
but-
We're due to find out the first elements of feedback in the next 3 months. So hopefully, I mean, for example, so the exemptions currently are 5 million euros on 150 persons. There's talk of that being 10 million and 500 persons. So we're starting to move in the right direction. And of course, you've also got Capital Markets Union, which is a separate initiative, which again is talking about offering a greater support to companies through using retail investors as part of that audience. So again, there's a couple of things on the way, hopefully, which might start to ease some of that burden.
It's a great question. Thank you very much. One at the back and then one over there, please. Thank you. Gentleman there, and then there's one right at the back, one over there. Thank you.
Thank you. What I'd like to ask, I think there was a move a couple of years ago of the stock exchange to allow AIM companies to be held in ISAs, which everybody thought that was a fantastic idea, and also to reduce the stamp duty on AIM companies, which was again welcomed by many people. What I've come to ask really is, we've had over the last year or two various Chinese companies that have imploded and the suspension of Globo, and I'd really like to know what is being done to improve the regulation of AIM companies, and really AIM shouldn't be the Wild West, which people are beginning to label it
Possibly one for Marcus, Mark, but perhaps you'd like to step into his shoes
Yeah,
for a
he's
second.
not here.
No.
I mean, I can't comment on specific situations, obviously, and obviously I sit on the other side of the Chinese wall from AIM Reg. I'm sorry, that sounds like a cop-out, but that's the way we work internally. Clearly, we have a regulatory responsibility from an AIM perspective and alongside other institutions. And on the website, actually, we've put now how that all fits together, actually, so which institutions are involved along the way. We have investigations ongoing. Again, I'm not privy to the detail of any of that. I'm sorry, that's not a brilliant answer for you, but I know that the AIM regulation team take their role very seriously, and I know the nomads are particularly a focus for them.
Yeah, Simon, given your role as a nomad, is there anything you'd like to add? I'm sure whether any of those cases were specific to you or not. So.
Yeah, I wouldn't like to comment on specific cases.
No, exactly.
And I'm not actually a nomad. I'm research, which is the public side of the Chinese wall. So if there were a corporate finance representative here, I'm sure they would say that it's taken extremely seriously. And I hope regulations get better as a consequence of what has happened.
And gentleman at the back here, please. Thank you.
Hello, my question was very similar to the previous one. The first thing is, number one, will there be an increase in regulations for companies coming onto the AIM? And number two, if, as so often, within 6 to 9 months of companies IPOing and getting onto AIM, there are disclosures that have not been mentioned in prospectuses, what is the London Stock Exchange going to do about it? Because, I mean, there's been so many problems with auditors not doing their jobs. All of a sudden there's profit warnings within 6 months of it coming to market, and the only people that are benefiting are the people that have sold it on to the market, and the retail investors are getting stitched up. What reassurance can you offer to the retail investors as an ongoing thing, so that new IPOs will appear attractive, and we don't have to not touch them with a barge pole for at least 2-3 years until we see a proper trading record?
Well, it's not for us to give guarantees. We try and build the right regulatory framework, so companies go through the right processes to ensure they do all the right things. And if there are omissions or they do things incorrectly, then obviously they face the authorities on the basis of that. I mean, for us, interestingly enough, our elite program's an interesting kind of aside to this, in that part of what that's trying to achieve is to support companies earlier in their life cycle, so that when they get to a point of potentially looking at an IPO, they're much better prepared to go down that journey. And hopefully we'll have our our first elite company joining the market this year in the first half. So I think that's part of what we're doing, trying to be involved much earlier. And part of what I do, I spend a lot of my time out there with companies talking about the pros and cons of a public market and things to think about early to get ready for these things. But part of this is also about the company being ready themselves as well, which is often something we can't control ultimately.
Thank you very much. Next question, please. Thank you very much indeed. Gentleman there in the blue sweater. Thank you.
A nice, easy question. Just the personal opinions. What will the disruption coming up to the referendum vote on Europe and the short-term consequences of a yay or nay afterwards?
Of a Brexit vote?
Yeah.
23rd of June, I'm reliably informed by some people, by the way. Anybody like to have I mean, we've mentioned European legislation, so maybe it might not put you in the spotlight again.
No, it's fine. I mean, I think in terms of Brexit and the vote itself, partly depending on the polling and how that looks ahead of time. And I realise polls aren't always a good guide to what might happen as an outcome. But if I think back to the referendum in Scotland last year, the year before last, when it became very close, the markets just stopped. So all September, we saw no activity on the markets because there was concern about the risk of Scotland becoming independent. And I think if the polling looks like it's of a similar type, I think that would again say May, for example, ahead of the June date.
I mean, Simon, any of the companies that you research, are they talking about it at all as an
Not
issue for
yet,
their day-to-day
not yet.
business? Or
I think it took a lot of the public in this country about 2 weeks prior to the Scottish referendum to begin talking about it properly. I think from a financial perspective, probably weaker currency is how it will manifest itself initially. Confidence might take a bit of a shake. Longer term, the pros and cons of that decision will be felt, but it'll probably take a couple of years after the event to be properly understood.
and any implications for your day-to-day business or your customers?
I think from our perspective, things will slow up in the run-up to it. There's only one way of looking at this. There's going to be uncertainty. Markets don't like uncertainty. Investors don't like uncertainty. And I think as you can see more and more commentary coming into the marketplace, that will effectively make people stop, think, and not do anything as a result. We see it from a company perspective because European legislation, there's lots of it about from a regulatory perspective. And we've just seen one major part of legislation just delayed now by a year. That's because the market was MiFID II, the long awaited.
Would you like to explain that in 30 seconds?
Not a chance. It's that high. But MiFID II is meant to be coming along, and one way or another that's been delayed by nearly a year now in Brussels. And I think that'll be pushed out even further if potentially we have a Brexit situation. So my view is it's going to slow things up.
Thank you very much for your question. Next one, please. And please don't ask for a simple explanation of MiFID, although I suppose you're welcome. It's a free country after all. Next question, please. Sir, gentleman in the blue jacket down here, please. Thank you. 1 second, please, sir. Thank you.
The valuation of tech companies in the UK has for years trailed that of the
discount,
US,
yep.
the discount to the US market. Do you think that there'll ever be a parity, and if not, why not?
Well, Simon, maybe first of all, give your explanation to why you think that discount may exist and whether it's merited or not.
I think there is a far deeper pool of capital in the US that ultimately underpins those valuations. But the market, investors often focused on the valuations in the unquoted arena, and they can be very high because there's all sorts of liquidation preference that venture capital investors can obtain and pushes up valuations, and they're not really real. Equally, we don't have many unicorns in this country, and that's probably a good thing because there's a high chance of some disappointment along the way. But just looking at the pools of capital, I wouldn't expect that disparity to diminish anytime soon.
Does that help at all? There you go. So, next question, please. I mean, was that particularly referring to the sort of VC, the sort of angel and VC backing that you get when the company sprout? That infrastructure is just more developed in the United States.
Particularly the VC industry is much deeper in the US. Yeah.
It's interesting. Thank you. Next question, please. We've got another 3-4 minutes, so we can squeeze in hopefully another 2 or 3 more questions. We've heard one brief reference to IPO pipeline. There was a number bandied about. I mean, again, without telling you anything that you shouldn't, so you have to lock the doors for the next 3 months. I mean, again, we've had a very tricky start to the year, but there's 1 or 2 companies, CMC Markets, 1 or 2 others,
Yeah.
putting their head above the parapet. I mean, again, is there any, what could people perhaps, if things go well, look for in the next 3 to 6 months on that side?
Yeah, I mean, we've got a fairly strong pipeline actually, but the problem's going to be risk appetite and whether or not the investors are prepared to support these businesses. And I think we've got a really important test now across the next week or so. We've got 3 or 4 main market IPOs coming through, which are going to be a very interesting test of what the investor appetite looks like. Interestingly, though, having had a quieter year on AIM for IPOs last year, shall we say, the pipeline there looks fairly strong this year. And what's been quite interesting, actually, is there's been quite a strong number of those have been UK businesses, which is quite encouraging as a person based in the UK to see, and that's my focus in our business. So I think that will continue that trend of seeing UK companies. We might see more PE-backed businesses come to market. I think there's also, alongside the growth point, there's a huge demand for income out there. I'm sure you're well aware of all of this. And so we see that through things like the AIM IHT planners. There's huge demand for companies who fit within those sorts of kind of focuses.
Simon?
I think we're seeing some very interesting companies come through and progress, and hopefully come to market. There's always competition. There's competition from trade interest and there's competition from venture capitalists. And so one of the main reasons that companies don't come to market in the technology sector is that they're required long before that event ever takes place. And that's because the valuations in those sectors can be higher than public market investors are willing to ascribe, and so it just never happens.
Mark?
Very difficult from our perspective, because at the end of the day, what we're there to do is ensure that the IPOs get through to the retail marketplace. And we sit there and we wait, and then all of a sudden 4 of them come along. And I think it's probably going to be a year off that. If we look at what we can see ahead and what's been announced as an intention to float, my point here is, as the gentleman was making earlier on, it's about ensuring that the retail investor gets a look in on some of these IPOs and it doesn't get scurried away off to the institutions. But that is going to come back to risk appetites and advisors getting involved again.
Perfect. We've probably got time for one more, two, if it's a really quick one. So next question, please. Or it will be the holiday question. I'm going to Dubrovnik. Who's going to ask it, please? So I guess maybe just one final question to finish off. If I could grant you a nice wish for the year, what would it be? What would make your year for your company or for the market? What would you think? What would it be?
A stable market.
That's always a start. Yeah. Simon?
I hope the yuan doesn't depreciate, because that's what's going to determine markets.
You reckon you reckon China's
yeah.
a big sort of litmus test for market sentiment?
Yes, absolutely.
Mark?
I actually want some volatility.
I've got the opposite angle. Okay, there you go.
I would much rather see volatility in the market, because it means that some of those retail investors can get an opportunity to get in at decent prices and make some money out of it.
Perfect. Anybody want to squeeze a final one in? Don't be shy. Brilliant. Thank you very much. Please give a big round of applause to our panel. Thank you very much indeed, everybody. Thanks, Russ.